Awesome. Good evening, guys. Welcome back, Samir. With me, obviously, is Kshitij. He's the editor markets at etmarkets.com, and obviously our good friend and well-wisher Samir Arora. He's an absolute legend, needs no introduction.
No,
Thank you so much, Samir, for doing this, and
thank you.
happy to have you here.
Yes, please. Thank you very much.
Good evening, Samir. Yes, and looking forward for the session. I'm sure it's going to be a very, firecracking kind of a session ahead of the festive season that we have next month.
Thank you.
Awesome. Samir, let's start with the top-down view of markets and all that's happening globally. Right from the Fed raising interest rates, geopolitical tensions, rupees at an all-time low. The headlines are absolutely brutal. What's your take? How are you navigating the markets?
So I think that they are brutal and they are, in some sense, we have to react to them and not say that, these things will pass. Although I think that the period of uncertainty may not be long. So the big picture is that the US Federal Reserve is absolutely keen to regain their credibility, and their credibility is hurt if the US market does not fall. So it's like saying that the Federal Reserve is saying that I want to raise rates and I want to raise them to levels which lead to financial tightness. But the market, if it responds or reacts by saying, no, no, you don't have the courage because you will care about this, because last time you did not do it, it's like saying that we don't trust you or we don't have faith in you, in your ability to go down this path. So this time I think they are really serious. Just to tell everyone, which I've told once before, I think on TV, but basically sometime in, I think, Feb or March, I saw a video of the Federal Reserve chairman answering some questions either of senators or congressmen or whatever. And there they were asking him, ki, will you take draconian measures if needed to control price stability? And this is what that Paul Volcker had done in the 80s. And is the current management of the Fed willing to go all the way or something like that? And instead of saying, yeah, you things, he says, let history record that my answer is yes. So from that day, seeing this kind of dialogue bazi, I got thinking that this guy is more serious than before. Actually, in one of the books I was reading called The $1 Trillion Triage or something, which Warren Buffett in one of his interviews had said that he was reading, so I bought that book. Usme, it was written that in 2012, this fellow went to Bernanke and said, start raising rates. So this guy's serious. And basically, high rates is like gravity. If we have been separately told again and again that don't fight the Fed, suddenly when the market is there and it's going up, we are trying to fight the Fed. So I think it's a serious thing. But because the market in US has already fallen, and because time has passed, and because Nasdaq has fallen 25, I mean maybe 27, 28%, and if you see
Mhm.
average falls, they are in the maybe 30 type range. I feel ki the US market, whatever it has to fall, it will fall between now and December. Either it falls more or it doesn't fall. It will all play itself out now because there are two more hikes. Those hikes could be of the order of 50-50 or even a 75-50. But whatever they are, and those two are the 75 basis point first time and 50 second time, but most probably 50-50. Everything will play out in this quarter. You have, three more
Mhm.
inflation numbers, two more hikes, whatever commentary. But in between, अभी दो नई
Mhm.
चीजें हो गई. One of this UK, where suddenly now they have reversed because of crisis. Actually, the rumors in the
Right.
market are कि वो क्या क्या हो गया. So now those things are the new issues. Good or bad, I guess mostly bad. And then this pipeline going blowing up. So actually, right now it's pretty bad, and there is no need to say India is an outperformer and India is this and India is that. Wo it might be, but 2 months are quite volatile and mostly down, I would think.
All right. So that's a very valid point, and you're correct that is going to be extremely volatile. In that case, a lot of these investors who probably entered in the last 2 years only know the stocks going up. What should they be
Nothing.
doing? Should they be buying the dip?
No, that's what I'm saying. See, even IVM in our India PMS, which
Mhm,
is managed by Dinshaw Rani, we haven't done anything. We have only got 5% cash. In my hedge fund, which I manage from here, we are 50 net. So there we are about 10% lower than our average. But what I'm saying is, if let us say the US market falls 6-8%, let's say, which I think will be
mhm,
quite high, but let us say, because I don't think it's a 10-20% fall kind of a scenario, because otherwise things are known. But now I have stopped
mhm,
believing that the US every day has discounted everything. That's the only difference from what I used to think in 2008. In 2008, when the market would not fall for a few days, I used to think it is their problem. They know what the issue is. It is a very efficient market. This much deeper than anything we know, and we are only reading
mhm,
newspaper or reading some broker report. So how do we know? So I used to become bullish. But even at that time, if
mhm,
somebody had sat down for 2 hours, which I broadly never did, you would have known that there is a problem. Or at least you would have read more of those kind of things instead of taking their market as given. Now I don't take their market as given because I really believe they don't know anything. I mean, this language which the governor said in this last hike, and थोड़े दिन पहले in
mhm.
Jackson Hole he had said the same words. So in five,
Yeah.
10 days, what did they think will be different? 10 days also, no, not 10, whatever, 20 days. What would have changed in 20 days? But they acted again surprised. So now
Right.
you're saying it doesn't matter if that market falls, say 8-10%. India, whatever it is
Mhm,
doing, at least for the rupee investor, it is massively outperforming. For me as a
mhm,
dollar investor, it is still down 10-12%. But जो इंडिया में रुपी इन्वेस्टर है उसके लिए तो मार्केट इज डाउन 3-4%, maybe it falls another 4-5%. It is not worth selling for that, thinking that you can buy it back. But you can be cute about new investing. You don't have to
mhm.
make it on day one, and you may not even make it. It's not going to change anybody's life. You'll be in better control if you say, let me relax for 1.5 months and then I'll see what happens. Nothing is going to be so up that you will feel totally bad of not having woken up every day to buy.
Interesting. There's actually that joke of the Fed commentary over the last 1.5, 2 years, where first they said there would be no inflation, then they said it would be transitory,
Correct.
and now,
No,
yeah.
that is true. But the point is, it doesn't matter whether they are right or wrong. They are
Mm,
going to do this now.
mm,
Right now, it will
right.
be even further credibility loss if with one number now they say sorry. So unless there's a big crisis, जैसे UK में crisis kind हो गया, where today there was rumor that some pension fund is blowing up. I don't understand why a pension fund, whatever is doing on margin, I don't understand. But if you see today's FT just now is writing that many pension funds would have had to pay a margin. I mean, what third-rate pension funds are these, which are doing something which requires margin? Anyway, so
Right.
the Federal Reserve अभी 1 minute में cannot reverse. Now market may go ahead on behind little bit is possible, but separately
Mm,
if you look at it, I don't think the US market can go up a lot even after it stops falling, because if you see all the previous, nearly all of them, not just one of them, all of them after a sharp fall, the market goes up because the Federal Reserve suddenly cuts rates or puts in a
mm,
liquidity injection. And
right.
that, pata nahi now even UK has done today, but in general, the view was that that itself will not happen for 6, 8 months, 10 months, or maybe the whole of 23. The way that,
Yeah.
so that's why if it stops falling is good, but for it to suddenly go up so much that you feel left out, I think that is not happening.
All right, interesting. So that in that case, Samir, like you said, India on a relative basis looks like it's in a sweet spot. The economy is firing on all cylinders. Inflation is not crazy 4 decade high, and consumer sentiment is also relatively strong. Then, in that case, do you believe that once the global picture starts improving, which it eventually will, then could we see a reversal in the foreign inflows?
Oh, that is nearly guaranteed. First of all, I think
Okay.
India will do well next year As soon as the US
mm,
stops falling, then you're making 10-15% doesn't look out of place. What looks out of place is if they are falling every day and our market is thinking that it'll go up every day, even if it has no, because there are interlinkages. First interlinkage is
mm,
interest rate. Not tomorrow, this fellow, or day after, or whenever, I think tomorrow, right, or day after, he will have to raise rates. He may not have thought as much. He may have to do two rates because otherwise, हमारी currency को देखो, they've basically 100 billion have gone. So if
yeah,
US rates are high, then Indian rates have to be high, whether we otherwise need that or not. Secondly, our big sector, IT sector, the customer is US and European companies. So we can't say all the
yes,
time, no, this technology is core spending and all that. That is true, but you cannot. So we are all connected at some stage, or I mean, at some level, everybody is connected. And third connection is financial flows. But I
mm,
think that whether money will come back or not next year from FI, I think it's nearly guaranteed that plus minus a few months it will come back. Why? Number one, just look at the last 25 years. It is not normal for money to go out from FIIs. Normal is for it to come in. So 25 years, I
mm,
think 4 years, if I remember, 4 years it has gone out. And those are specific years, 2008, 2018, 2011, all bad years for the market. Okay, and this year, and
true,
this year, at least big picture, it doesn't look that it is India related problem which has caused this outflow. It is a macro issue, maybe because of dollar strength, or it could be that we are all part of one bucket, which is say emerging market or Asian market, और उसमें China बड़ा गिर गया, so
yeah,
whatever. So natural thing is to come in, number one. And natural thing is that every year these guys have more money to invest, because even if GDP of the world grows 2-3%, that leads to X% saving. The pension fund fellows getting money, the other fellows getting money. And the other thing for us, which is a big positive in a big picture sense, is that China has done very badly, but it has
yeah,
done badly for specific reasons. It has not done badly ki bhai, three markets were going up and for some reason that we can't pinpoint, but China underperformed. So as a mean
mm,
reversal, it should now outperform. But it has fallen for specific reasons which have specifically hurt the investor. Government policies related to uh, ed tech. Tuition is not allowed anymore. It should not be a profitable. I mean, it should be not for
yeah,
profit, or gaming that kids can't play on weekends, or going after Alibaba, or reversing the listing of Didi in New York, which I think got listed at $17 and then got private at $2. These are all specific things done by
mm,
government for some other big picture, whatever reason. How can the public investors accept it totally? तो मुझे लगता है कि उनका weightage, their index weight relative to us, we are some 12% India and China is 30 or something like that in emerging market index. They cannot get
mm,
30 for 30 next year. Yeah. If they get 4-5% less because people are frustrated with zero COVID policy, or because one day China might be sanctioned or God knows what, हमारे को we need only 2% more for us to have a 10-15% growth in our flows. We will get, and even today and even last year we have still got massive inflows effectively from the same investors, but via private equity and venture funding. तो investor तो वही
mm,
है. It's not that the investor is different. It is just a different individual in the front, who looks after private investments. So it's not that the FII, the investor, which might be endowment or sovereign fund or family office, there's no fourth, fifth category. These are the 3-4 categories. Whether you come in as an FII or as a VC or PE, the same log hai. If I might be a fund, but behind me has to be one of these 3-4 categories only. Now, who else is giving money? So if they don't
right.
give us this time, they'll give it to them. Next time, they might give back to the public market guys. Nobody's walked away and nobody will walk away. So it'll all come back.
Awesome. Samir, just sticking with the global theme, and you did mention slightly about the US tech stocks, and we've seen a crazy sell-off, right? Even Apple, Google, Microsoft, they're all down minimum 30%. Apple, obviously, today the news being that they're cutting back on their production estimates for the latest iPhone. What is your like top-down view on tech stocks, and perhaps you can include something on the IT services companies in
So
India as well?
US tech stocks, other than Apple, I like all of them and I have all of them. And tomorrow I'm
Mm-hmm.
going to buy a Galaxy Fold, because who the hell wants an Apple 14 which will look exactly like Apple 12 which I have right now? And after 30 seconds, I will not know why I got a new phone. Yaar. You need to at least do something new. So I'm going to get it tomorrow evening. But by the way, so I own all the other, but US tech stocks are very good. They are very reasonably priced, but they're all getting hit. Google, but I like Netflix. I bought even new stocks in July and June, and Spotify, and I bought Nvidia, and all of them are down. I bought them when they were down. I was looking for stocks that are down 50% or more, or 40,
Mm-hmm.
because these Google Fugle we had. So that is okay. Those guys will over time do well, maybe after 3 months. Indian IT, I have zero for the first time in my life, which is 26, 27 years. Say, I've been a fund manager in India, and in the
Mm-hmm.
90s, Alliance Capital did very well, and one reason for that was that we were the early guys in IT, and that changed our life. But I have zero right now, because right now uh, uh, I only saved 9-10%. It's not that I sold everything on December 31 of 2021, but I thought ki now and maybe for 6-12 months it makes no sense to own IT. IT, it's not that when we sell IT we put that money in a bank. We buy something else with it. So we bought financials and consumer, and last month we saved a little bit, and this month we've saved 6, 7, 8%. So I'll see it after some time, but all I can tell you is that when these companies come on TV or when they meet us, they don't know
Mm-hmm.
anything. I've seen that in 2000. Now these companies know only 10 days more than us, as in they can see 10 days ahead because they have some order which we don't know about. Nobody knows
Mm-hmm.
anything. It is a big picture call that when the customer is hurt, he will cut back. Because not only is he hurt because his stock price is down, his this thing is down, his buyback is down, but also because some part of the investments are coming from, I mean, sorry, business is coming from um Europe. That is definitely down, and some part is coming from IT spending by startups and new ideas, and that is definitely down. So overall, it is down. Now you can say, but the stock is also down. But we were just to
Mm-hmm.
justify to ourselves, because we just wanted to sell. We justified it saying that these are higher valuations than pre-COVID. So who knows what it should be? But we are not interested in a stock or a company which is going to grow 5-6% per annum, which is the current number in dollar terms for all these guys. After we sold, just I think last week, Goldman Sachs said that the earnings estimate for 24 is 6%. You saw that day
Mm-hmm.
Accenture, which in the current year had grown 22. I mean, the year that ended, and now they guided for I think 7-8. Somebody can say it's more or less. We don't have any. For the first time in our life, we'll see after 3, 4 months, 6 months.
Right. All right, interesting point. I just have two comments. One, if you're buying a Samsung Galaxy, go for the flip instead of the fold. If you're like a retro phone, if you
No,
ever owned a Motorola Razr, you'll
yeah,
love
yeah,
it.
no, but I'm not going to buy. I want to buy a fold because I like this big phone and all. And I have.
The big one with with the pen
Is
and
there
all.
a pen also? I don't know. Is there a pen? I don't know. Okay, but whatever.
Yeah. And just one observation. So in the list of stocks that you mentioned that were down more than 50%, you took a handful of names. One glaring omission, Meta.
Because I already
Are
had
you
it.
like negative?
Meta I already
Okay.
had, so we still have. Yeah, yeah, we still have that.
All right, interesting. So you did mention Samir earlier that you sold out, you have zero exposure to IT, and you probably bought in some of the banks and financials. Um, Could you explain more in detail as to why you're bullish on banks? Because while the economy has been doing well and everything, and you'd expect banks to, perform well, we have seen a relative underperformance from them. Uh, how are you
No,
looking at
actually,
this
no.
space in general?
Other than HDFC Bank, there has not been relative
Yeah.
underperformance because ICICI has massively beaten the market. State Bank has massively beaten. We own IndusInd that has massively beaten. We bought this IDFC First Bank massively beaten. So I don't know which one. AU has massively beaten. No, I don't think it is. I think other than HDFC Bank, which now might be
Mhm.
3 or 4% less than the market, because the market is down 3-4% and is down maybe 7-8%. I don't think the financials or banks have underperformed year to date. I only talk calendar year to date, but even otherwise they have not.
Okay.
So the big picture for banks and all is been simple, that for many years they didn't give new loans of the kind which got them into trouble, which is these big loans, corporate loans, infra loans, and therefore their books
Hmm.
are good and they are well capitalized. I think overall some 16-17% for the whole industry, and generally the growth rate, you are still getting some share. I mean, State Bank itself is PSU, but other than that, you still have a tail of PSU banks from which you can get market share. And they have not been re-rated. If you look at ICICI
Hmm.
Bank, you can say a little bit has been re-rated, but other banks, if you look at not the price movement but the valuation, they would be in range or in line with what they may have been 2 years ago, 3 years ago. For broadly, they gave you returns in line with their earnings. In consumer sector, mostly the earnings grew at one rate, and even in IT, and the stocks grew much
Hmm.
much more. So they were re-rated. Here, it always looks like you're buying them at average valuations of the last X number of years. Their growth mostly comes from earnings growth rather than higher and higher rating. So they are the
Hmm.
easiest to buy.
All right. Shailesh, over to you.
Thanks, Yash. And well, we all know that. I don't know about the stock which Samir is going to buy tomorrow, but definitely, the Samsung Fold which he is going to buy tomorrow. So that is for sure. Samir, let me take you away from the current market, and let's go back when you started your trading journey. And being in markets, teaches you every day. Any lesson which sort of the market taught you when you started trading, and the deal went south?
For hundreds of them, there would be no mistake that we have not made. But if you say summary of the, like, which is the biggest common theme, the common theme would be basically to buy infra related stocks where the customer was the government of India. Um this basically means that not no, we're not talking about some cement steel kind of infra. We mean the infra guys, whether it was the port guy, airport guy, road guy, power guy, any guy. So now we say that instead of saying we will be careful, we say don't buy anything related to this unless out of thousands some one fellow can prove that he's although called infra but A B C D kind of thing. But we have lost a lot of money in our life on infra related investments, which previously I used to consider as the theme for India because India needs infra and all that. By the way, related to this, I have a point which, these days we talk about the fact that because India is now investing in infra, or they are investing in digital, or we are investing in whatever, that therefore the next 20, 30 years are very, very good. I think they are very,
Right.
very good for the economy. For the stocks, actually, last 25 years have been outstanding. India's performance is higher than US. It is higher than Warren Buffett in dollar. I'm talking higher, way, way higher than Europe, way higher than Asia, Japan, emerging markets. India might be, if you leave out one small country that might turn up, India would be the number one best market that we've had for the last 25 years in dollar terms. Okay. It has beaten Warren Buffett by 1.1% per annum. So,
Right.
looking at these things, what I've concluded is कि just because India needs it and this and that, and therefore we invest, ये चलता नहीं है. For example, China had GDP growth and per capita growth and infra investment and power non-stop or whatever, and its returns since the last 25 years 1% per annum. And since it came into MSCI emerging markets, which is 1992, from 1992 to right now, the returns have been negative. So therefore, I also made this mistake. Infra is good and this and that because India, it's good. Stock market doesn't need all these complicated things. So that is my biggest lesson, that don't overly connect, that this is because it is in shortage, because it is something we need to catch up with the world.
Right. Or where the government is involved.
Generally, I found that either because there was, for example, you saw many cases. First of all the guys who went into trouble, whether it was GMR, GVK, Lanco, कितने सारे थे, HCC, Jayaprakash, you may say that some of them had bad corporate governance and all that, but they went into that point because there was some issue that something got stuck. Their approval got stuck, their cases got stuck, or they won arbitration. Reliance, their arbitration they won, but they could not be paid because the rule was that now you need a bank guarantee. And when a fellow had just come out of a near bankruptcy situation and won actually an arbitration, he still could not be paid. So ये चीजों से दूर रहना is better. That's why private financials, consumer, IT, pharma in general have been easy things to do, and leave out the macro for the economy. This thing, it's good for the economy. We don't need it in our portfolio.
Right, I'm sure duly noted, and to all our listeners. Also, a work from home theme sort of worked post 2020, but now that we all sort of slowly making our way back to the office, which of the themes are likely to lead sort of the next leg of the rally?
No, that we haven't looked at it like that. Basically, we like these three themes, which is financials, consumer, which is we call them urban underpenetration or middle class underpenetration, and this actually we like IT pharma, except that today we don't have. So and specialty chemicals. But point is that if you look at big picture, themes don't come up every day. The themes will be some event based. But if you look at sectors and all, these are the three sectors where most of the money has been made. You look at the Forbes list of billionaires, they will come from these three themes. Basically, these are the themes for the world. Now, sometimes we say it is financial because it is winning from state owned banks, or we might say we like the consumer where there are a lot of unorganized, so it can become an unorganized to organized theme. वो होता वो इसी के अंदर ही है. It is just a matter of dicing and slicing these things. So like work from home separately, whatever we bought, we at that time called it consumer because it was a consumer who was doing it. So now in that sense, we say that we want low ticket consumer. We want not consumer discretionary. We don't want cars. We don't want fridge and TV and AC. We want going out and eating food, seeing a movie, or going for tourism or hotel, or we own this campus shoes, things like that, which are low ticket things day to day, not meant for the first 50 lakh people of India, and maybe still out of reach for the 70 crore people of India. But for the beach ka 10, 20, 30 crore guys, maybe it looks under penetrated. So under penetration, I think, is what I like to find if I can, under penetration.
Right, duly noted there as well. Now let's come to Dhan Ki Baat, the series which you've just started. So you were explaining on the process and how you sort of filter stocks. If you can share some pointers with our listeners as well.
Okay, so there the big picture sort of point that we have understood is that when you're trying to build a philosophy, so you are starting from zero, you have read some books, so how do you start? कि अब क्या करें? Okay, we have understood that we want equity, or you understood that you want publicly listed equity, because that itself also, depending on the job you land up in, somebody will come up and say that my philosophy is that I invest in distressed security, some debt security, God knows whatever, right? But we have landed up in public markets, and that was not part of any philosophy because of job or whatever. We landed there, and we have landed up in India, although my philosophy does not relate only to India. So now the next question is, will you be concentrated or will you be diversified? Will you be growth or will you be value? Or will you be basically, let's say these two first. Or you could say, will you be fundamental or will you be technical? That is also part of our philosophy.
True.
So
True.
in that growth value, may we concluded that we don't care, that we are not so dumb
Okay.
that we can
Right.
only do one part. I am amazed that we have India is say पता नहीं 1% of the world in terms of index or whatever, or maybe 2% होगा whole world में. And there are my peer group guys who might be less educated, more educated, saying that we manage money in 30 countries and we also invest in debt and we also sometimes buy commodities because I run a global hedge fund. Or hum kahe, I invest in India, but it is so complicated that I only buy value stocks. So we, number one part of that philosophy is that if a stock is being bought because it is cheap and otherwise you can understand, okay, if the stock is very high growth and a little bit expensive, okay, what is so wrong with it? So that is number one. The second part that we've understood is that when people talk about diversified versus concentrated, you only hear the stories of the winners of this lottery. The guy who buys 10 stocks and loses basically disappears and you don't hear from him. So you only hear stories of the winners. And it is by, I mean, there is no choice, but there'll be nearly equal winners and losers in the game of concentration. And that is like a lottery. So usme, I can show you separately, which was not in Dhan Ki Baat, but I made this presentation in Calcutta 2 weeks ago where Safir was also there. That if you look at the uh, performance of Warren Buffett, in black and white, I can show you that concentration has hurt him in the last 25 years. How? So we looked at the stocks that he had concentrated positions in the last 25 years. So he bought Coca-Cola, then he bought American Express, and then he bought Wells Fargo. Okay, these were his three concentrated positions at the end of 90s, or I think 1988 se ye tha. So if you look at the performance of these three stocks from then to now, actually now he sold off Wells Fargo actually worse than today's price because he sold it in 20 after COVID. But still, even if you take it till today, Berkshire stock has done better than his holdings, his top holdings, which means his top holdings have not helped him, his tail has helped him. So,
Right.
because it's a weighted average, effectively like a portfolio. So, my thing was that it is not very few stocks that do well. A very large number of stocks do well in the market. And we call doing well as beating the market. That is my definition of doing well. So if there are some 500 stocks or 200 stocks in your index, broadly
Right.
speaking, some 100 will do better and 100 will do worse. You can see it any year, any period, any market, because it has nothing to do with any period, it has nothing to do with any market, it has to do with how an average is calculated. That's an average of those returns. So the bottom line lesson for everybody is you don't need to find the best company or the worst company. You have to divide your universe. Is it good or is it bad? There is nothing more required. After that, it is luck. For example, this year, what stock we used to call good and we still call good randomly went up 80%. अब क्यों गया किसी को भी नहीं पता. Varun Beverage क्यों गया भाई 80%? We only bought it. It is the good
Right.
camp. But why suddenly in a year where the market is down 2-3%, it is up 80%? So we buy 30-35 stocks which we say are in the good camp. Our number one stock which we say is in the good camp has not been in the good camp for 2 years, which is HDFC Bank. So it is not that every stock
True.
which we think is in the good camp. Good camp means better than the market on whatever factors you choose. So that is our thing. Don't have to say this is the best stock, this stock I should take. Concentrated bet on bull. You will know anything about concentration. You buy 30 stocks, play the stats that half the market is going to beat the market. And in the half, or actually it's about 45%, and the last stock of that 45% is beating the market. So not all your stocks will be the last if you get the box right, and some of them will be say at the 30% or at the 25%, number because you don't know in advance where it will land. But whole game is separate between good and bad. There is easy to do. So we say there is value in differentiating between good and bad, and not much value or even success in differentiating between good and good, and therefore forcing artificially, "Ki, I want only 10 stocks. So instead of I will buy HDFC Life instead of ITC. If you like both, you buy both. Nobody knows whose turn it is next. Just choose sufficient number of whatever you think is good and then let it be, because you don't know what the market will decide. This year, for example, randomly, why is these two hotel stocks up like 80%? अब इतना क्या हो गया? But ठीक है कि people are
Right.
going back, but the stock had done well even last year. This Lemon Tree and Indian Hotel.
Uh,
So the point is nobody
yes,
knows.
yes.
You just choose whatever criteria you say these are good, but don't think that I know this versus that, and I know this stock versus that. So nobody knows.
No, interesting facts there, Samir, and I'm sure our listeners would have taken note of all those pointers. Now, another important aspect is, what does long term mean for you? For some it could mean 6 months to probably 1 year. So, what is your definition of long term?
So for us, long term, at the beginning when buying is 1 to 3 years. But like for example, I have held one stock, of course, for 20 forever 6 years with HDFC Bank, but I bought Kotak Bank. We used to own 5% of Kotak in
Right.
2002, and we would have held it. After that, I left Alliance, but then I again bought it in Helios, so we would have held it for 13, 14 years. The point is, you are not holding it for 13, 14 years with the starting point that I will hold this for 15 years. It continued to do well, so you continue to hold it. It's not the same as saying that I'm a long-term investor. So for example, I think Warren Buffett, when he says put all your eggs in one basket and watch the basket closely, he's completely short term. Why is he watching the basket closely? Why every morning you have to watch the basket? That means you are short term. That means if something is wrong, you will sell, which I agree. If nothing is
True,
wrong,
true.
why will I sell? So if the
Uh,
company continues to do well, why should I sell? But if you do badly, and we feel that that badly is a little bit permanent, obviously nobody will know whether it's 100% permanent or whatever. We have better thing to do. That's what I'm trying to say. We will then buy something else. Why should, one more thing I don't understand is people say that you should hold stocks for 20 and 30 years and you should never sell. I mean, what a ridiculous waste of the fact that you're buying a publicly listed company. The promoter has to hold it for life, and in return, he gets private gains over and above share price. He becomes a CEO, he gets a salary, his kid becomes an executive director. We are in, if you do well, we will hold you. If we feel you will not do well for 1 or 2 years, and then you will do well. First of all, nobody knows it exactly. So then we'll see. Sometimes, like we have held HDFC Bank and 2 years not doing well, but we hold it. So that is stock at a time. But the point is, we are going in initially with a 1 to 2, 3 year view. If you disappoint us in the meantime and we find there is a mistake, we are not long term in that sense. We are long term. If you continue to do well, why should we sell? So going in, if somebody tells you it's a 20-year story, you know it is an oversell because he can't justify it maybe on the shorter term or something else. It should be justified that over the next 2, 3 years it is good, and then we'll see
right.
whether it continues to be good or not. That is the way that we do.
So it's not 20, but ideal time horizon should be 1 or 2
Multiples, no,
years.
we say
That
multiples of 1 to 3 years. 20
multiples of
years,
1 to 3 years.
absolutely. I mean, 20 years means that nobody knows anything. You are just,
किसने
it's a
देखा मतलब
bullshit.
हाँ
You're lying,
right.
basically. Because,
True.
if you want, you can read these books, The Halo Effect, and it'll give you hundreds of examples of how the research done by McKinsey consultants and Stanford professors who would do much more research on companies in terms of quality of management and succession planning and hairy, audacious goals, and how they did this, completely failing on finding out the stocks that would do well for 10 years or 5 years. Completely failing, as in half of them went bankrupt, those companies. This is in the two
True,
books, Good
true.
to Great and Built to Last. Okay. And the point is, we as analysts can, if at all, that also is if at all, analyze a company for the next 1, 2, 3 years, saying, ye banda CEO hai, this is the government policy, this is the interest rate, this is this current NPA, this is the current valuation, and I think it makes sense. 3 years later, something will happen, and we will say, yes, it makes sense. So we bought Bajaj Finance in 2011. The P was 6. Do you think that Sanjeev Bajaj or Rajiv Jain knew that this will be a whatever 100 bagger? They did not know. So how am I supposed to know?
No, no.
We bought it with a 2-year view, and we held it for about 10 years, and we made 70x, and then we sold it off. But the point is, nobody knew. By the way, there's another story in which I have the same story, and Ramdev Agarwal gives the same story. In
Okay.
2009, we all bought Eicher Motors because Eicher had done a deal with Volvo, in which Volvo gave them some business for making engines for export, and they said, we'll bring the Volvo truck to India. And I did a meeting with the management, and he must have also done. I met them for 1.5 hours or something. There was not one word, not one question that we had or that they had that we have a motorcycle. Okay. There was no discussion because nobody was interested in that motorcycle. It was a discussion. Volvo kya karega? Volvo kya karega? Volvo ka business kaisa hai? And what is the value of that? And in the end, that Volvo business today, I think zero has been done. And it turned out to be a motorcycle story. And we sold that stock in COVID, in Demon, because we thought Demon mein, this expensive motorcycle, wo hamare farmer ke paise khatam ho gaye. But by that time, it had gone up 40x. And you bought it on some other reason. So nobody knows. All you're doing is differentiate between good and bad and play the stats. The stats are, broadly speaking, some half the market is going to beat the market. And if your noble goal is only one, beat the market, you are a hero. Because nobody beats the market, or only very few beat the market. And market
Right.
beats other things also, like beating debt, beating real estate, beating gold. So आपका
Yes.
simple goal है कि किसी तरीके से market को beat कर दो, over analysis नहीं करनी है उसके बाद.
Interesting points there, Samir. Now over to you, Yash.
Samir, your very good friend Shankar on one of our Twitter spaces had said that new age businesses are just old age businesses, but with an app. Are you also of the similar opinion, or do you like any
No,
of these recent listings
nowadays
like
I like
Zomato?
Zomato. And Zomato could be considered an old age business ki by restaurant se you could have ordered. But it's
Hmm.
not so straightforward. So
Hmm.
we haven't bought any of the others, but Zomato we have bought after this last result, thinking ki, because they are now breaking even on the food business, along
Right.
with the interest that they have on the cash. And then this issue was of Blinkit, and we said, "Chalo, देखेंगे बाद में अगर food break even हो जाएगा, so the stock can do well." So we own Zomato basically. If you want
All
to
right.
read a book, everybody read a book called The Platform Delusion. One of the best books
All
of
right.
this year that I've read. And usme, if you interpret yourself, you will find that Zomato is a proper platform company. Basically, that book is saying that all these companies are not platform companies. Like, broadly, big pictures, and Netflix is a platform company. They say it's not, or something else. But whatever I interpret from that is a platform company means, first of all, many to many. That means there should be many
Hmm.
guys on this side, many guys on the other side. And for Zomato kind of story, unlike say a Nika kind of story, you can't
Hmm.
start it as a chote mein. You can't randomly start a food delivery company because you have to then immediately try for a India-wide market share. You can't say I'll also start and see how it goes, which in theory you can do for an online cosmetic business, because you can say I'll also start. Let me also put my 20 brand. Geo can do, then Shopper Stop will do, then जो भी है सारे they can do. This business is not that straightforward to do. So either you agree to put big money and take 20% kind of market share to be viable, otherwise you will not do. Now again we are reading that Amazon wants to do. I don't know, but I interpret it in my way. Ki this is a proper platform company in which it is not easy to have another guy. Who
All right,
knows? Who
understood.
knows?
Who knows? Yeah, perhaps Amazon might enter.
We'll see.
All right. Samir, 2020 and 2021 were the years when crypto really went mainstream. While equities, at least for India, were still doing fairly decent, the maximum pain has been for the crypto hodlers. What is your view on the space? Are you a believer, or like most famous investor, you think it's going to go to zero?
I think it will go to zero, and if you get 0.1, you have made 0.1. Because
All right.
till today, nobody's been able to tell me why why crypto. Then Bitcoin. They'll say no. We are talking about the technology and we are talking about blockchain, which I have no interest in. I am only asking whether this investment is good or not. So don't give me lectures on blockchain and all that, which also I don't fully understand. But it is not what I'm investing in. So I don't believe in Bitcoin or any coin.
All right. All right. So that's a common point between both of you guys.
Who are the two guys? Me and Shankar?
Yeah,
Acha.
yeah. Even he
Are there
doesn't.
many.
I mean, he did say something similar to the lines that he likes the technology
Now,
behind
I
it,
don't
but
even care about the
not so much with
technology
what.
because I have realized that I have too many things to do than to randomly learn because I have unlimited work anyway. यार अब कुछ पे और चीजें कोई मुझे आके बोलता है what do you think of biotech? मैं कहा मुझे क्या पता? When the company comes, I will analyze it. So I am not interested in blockchain technology for my general knowledge. I have too many things in which I need knowledge first.
Awesome. Samir, you said in a recent interview that being contrarian isn't enough. Being early is also essential for making big money. And all our lives we've heard that don't try and time the market. Time in the market is greater. Can you elaborate more on
No.
this?
What I meant was actually what Dinsha and I meant was that most of the things. If we look at the stocks that we bought, say for example, we were very early in IT. We were very early in the
Okay.
private sector banks. I was the largest investor in Bharti at the IPO as a mutual fund. We used to own 5% of Kotak. I used to own 10% of Z. In all of them, it is not that the world hated them. We were just
Hmm.
early because our formula allows us to buy new things, allows us to buy things without, for example, so let me explain. So our idea is that how to put a stock in what we call box one or box two. Let us say box one is beating the market, box two is being beaten by the market. So many people say that the formula to make money is buy good stocks and hold them for the long term, right? The problem with this
Hmm.
is that it is completely, basically it's nonsense because you don't know ahead of time whether it's a good stock or not. So for example, if we say look at Kotak Bank, example exhibit A of the theory that if you buy a good stock and hold it for the long term, see it has gone up 400 times. But in 2003 or 4, how it became a bank in 2004, how did you know that in 2004 that it's a good bank? It was being run by a broker whose name was Uday Kotak. How would you think that he's become a good banker also? So, on what basis will you say it's a good bank? If somebody says, I buy stocks which have a 20% ROE, how do you know that day and how many years later he will get maybe bank a little lower? When he didn't become on day one earning that. So, you have to have a model which we have, I'll explain, which allows you to buy
Hmm.
some of these. For example, let us say in 2020, suppose somebody says, I buy good, strong companies, good financials, good this thing. How do you buy Indian hotels in 2020 when the hotel is shut down? It has making losses. So, which model will fit that in? You need a model. तो हमारा मॉडल अलग है हम कहते हैं कि there are 8 factors and you should not be bad on any factor first. We don't have to be good on
Okay.
every factor. So when we buy a new company, like say on the olden days Kotak, or in newer days we bought Dixon and all, we don't know whether the management is good. We say management not bad because we don't know anything which makes it bad. But it is good on some other
Right.
factors. It could be good on industry structure, it could be good on valuations, it could be good on not disruption, whatever, are other 7 factors. But it doesn't have to be good on every factor. So we could buy Indian hotels also saying the results, considering that it is closed, are not bad. That considering that the hotel and the industry is closed are not bad. It is it in the sense that they won't blow up the uh, balance sheet and they won't make him bankrupt. So theek hai, the results are not bad in the situation in which we find ourselves, but it is good on ABC. So that is how
So everything is relative.
everything is relative, because the whole idea is to divide the universe into 2, good or bad. And then whatever you feel is not bad on any of the 8 factors, which because makes it good, फिर आप देख सकते हो उनमें से जो बच गए कि which one has actual positive factors. But at the first level, it should not be bad on any of the 8 factors, because our idea is that generally the existence of even one of those bad factors makes a stock fall into the underperforming group. Sometimes they don't. Sometimes what we think is very good falls into that. But statistically and reasonably, if a stock has very high valuation, it will underperform for the next whatever 1 year, 2 year. If a stock has very bad theme, generally it will underperform. If a stock is from a sector which you think is getting disrupted, most probably it will underperform. If a stock has results for the next 4-6 quarters which you think will be bad, even if everything else is good, mostly it will underperform. Now once in a while they will outperform the index. So kya ho gaya? We are not buying them, but half or 40% of the market is being on this side. If I miss a few, that means there are errors of omission, that I thought they will underperform, but they ended up outperforming. Go to hell, who cares? There are many more. That's the whole idea.
Absolutely. Samir, first of all, congratulations. Your firm has received an in principle approval from SEBI to launch your mutual fund business. Any updates you can
No.
share, and how soon investors can start?
No, that's long time away. Long time means that is some 6-8 months away, because this is called an in principle approval. Then we have to,
Mhm.
satisfy what they want. It's just that now we have to do. It's not anybody's approval. So we have to hire compliance officers and risk officer and tie up these Carvey versus cams, and then computer and some ये वो. So ये सब चीजों में, because whoever you hire, he's working
Mhm.
somewhere. He takes 3 months to come. It takes 6 months, and then you apply, and hopefully you immediately get a actual license. Then you apply for a mutual fund scheme. Ki this is our first scheme, and then it takes 2 months to get that. So I think 7-8 months lagenge at the fastest pace if we can do it. Just to tell you,
All right. So
before us,
FY24.
sorry.
So FY24, we can keep our eyes out for.
Say 24. Yeah, something like March, April 23, if we can do it. But just to tell you, the 2 guys who got the license before us, sorry, in principle, which is Zerodha and
Mhm.
Bajaj FinServ, I'm not 100% sure, but I don't think they have still converted it into a license. So I don't know why they are taking so long. We believe it can happen in 5-6 months. But both of them, I think, have not got. I think they've got the in principle, but I have not read anywhere.
Yeah,
So
something around those lines. Yeah.
so it takes time. So therefore, it's 6-8 months away.
All right, awesome. Samir, we've completely run out of time. It was really awesome
Thank you much.
speaking to you, and thanks for taking out the time. I know it's late
that's
in Singapore,
Thank you.
and you can listen to Samir's take on markets and individual sectors, and much more.
Thank you. Thank you.
Thank you, Samir. Thank you, Kshitij, and good evening, guys.
Thank you. Good evening. Yes.